Welcome back to the LPR Trading Group. It's Dave again. I've got another video for you guys today, but we're starting with this intro here. And what I want to talk to you about is last week I took some time off of YouTube. I had a friend and a fellow trader actually come up for a week and spend the week at our house with myself, my wife, my daughter. We went out for dinner, went and did a few things at nighttime. So it kept me away from the YouTube scene, and it was important. It's kind of a lesson that I want to give to you guys as well. I want you guys to always remember, try and fit trading into your life, not your life into trading. It's very important that you try and balance things out. I'm not always the best at doing it, but it's very, very, very important. I had a fantastic time last week. I'm excited to get back to it. I've also changed up the video a little bit. I've put my sort of face camera in the bottom corner of the screen, so you guys are going to be able to interact with the face cam. I think it's a little bit more personal. Let me know what you guys think, if you prefer it that way or if you just want to see the full screen and you don't care to look at my mug. Either way, I'm cool with it. Enjoy the video, guys. I want to show you guys the trade that I took today. All right, what I did was, again, I combined ICT and order flow concepts in this video, and a big picture idea of what I was looking at here was actually this weekly chart. Okay, so we've got the weekly chart here. What I was looking at is I mapped out a few areas here, weekly FVG, and I've got a weekly volume imbalance. Okay, let's pop it on the weekly and you can see those more accurately. Okay, so right in this area, I expected price to come down here, especially off this big leg to the downside. We've been running down for a few days, all of last week actually. I wanted to see price get into these areas. Now, once price actually brought itself into this area, the actual price I wanted to see to start looking for longs was 43.35. We didn't quite get there. We got to 43.38. In the market, if you're expecting perfection, you're probably not going to get very many trades or very many good trades. So we drove down into this area, and after we got there, I started dialing in my smaller time frames. I came down to the 1 hour chart, and on the 1 hour, it being Monday, I said to myself, all right, we have a range establishing here. We've got this high, and we've got this low right here. I'll wait to see what the market wants to do outside of these ranges. Okay, once we got outside of the range, we've got this 1 hour here marked out by this white line. We've also got a 1 hour fair value gap marked out here. Once we get outside of that range, I want to see what the market is going to do. And what I want to see actually is, where's the participation? Is it on the buy side to and through this fair value gap? Or are we going to start getting rejected and possibly get a trade to the downside? One thing that I mapped out intraday was I had these fair value gaps here on the 5 minute, this guy and this guy. And we'll flip to the 5 minute chart just so you guys can see exactly what that looks like. 5 minute chart, we've got a fair value gap here in the post-market session or the on session. And we've got another fair value gap here on the 5 minute right at 940. These are somewhat overlapping. So I did expect, if we got a short off of this failure into the 1 hour fair value gap, our targets should be this area. Why? Because just like price held these fair value gaps, it could possibly hold and drive to the upside. That was my concern, and when I got in this trade, that's what I was targeting for shorts. So what I did here was I went down to the 1 minute chart and I waited for price. Just simply waited for price to drive up into this one hour fair value gap above that 1 hour buy side liquidity. We push up, we try to drive up again, and we couldn't get to this high. We made relatively equal highs. This had me a little bit concerned. I looked at my TPO chart, and I can actually show that to you guys here. I looked at my TPO chart, pop this open, and at one point on the TPO, we had A period, which is right here, and B period making a weak high. If I divide these up into these profiles right here, we'll be able to see it better. You see A period and B period were only one tick off the highs. So I was expecting that we're going to turn around and break those highs at some point. I'll open Epic Pen so we can annotate a little bit here on this chart. I find it's better if I'm giving you guys some context as well as a visual representation by just simply drawing on the charts. So we've got Epic Pen open. A period and B period make these relatively equal highs. C period drives down. We barely get below B period low. D period wicks below C period low. And then we drive to the upside. So expectation was we were going to take out those poor highs at some point today, but there was a short opportunity before we got to and through those poor highs. Okay, So what happened here? Market drove up, we pulled back, we made a lower high essentially in the 1 hour fair value gap. If I grab this guy here, we'll drop a line right here. We can see we've got displacement. Some might consider this market structure shift, others might not. Teach their own, okay? This was a shift in market structure for me as well as displacement because we're trading up into a 1 hour fair value gap. So we come off this area, what am I doing? I mark out the fair value gap like so right here and I wait. I actually have to make sure that I've got something inside of my order flow that lines up with this ICT concept. Let's go to the footprint chart. I know this is the chart that you guys all love and half you guys are confused about, but trust me, by the time we're done with this session here or section, you guys are going to be pretty fluent with this chart. So this is about the area where we dive into that 1 hour fair value gap. Imagine this is the line or our 1 hour fair value gap breakout. We break into the area. What do we do at the top of, let me pull this over here. What do we do at the top of this range right here? We fail to accept price higher, which means buyers are not aggressively buying over these highs, and we start showing some sell imbalance on the left side of the print. Sell imbalances come from aggressive orders at the bid, okay? It's an imbalanced price between the bid and the most current corresponding offer. So we get sell imbalances plus failed acceptance through the high. Price drives down, and as we drive down, we print that fair value gap somewhere in this area. Now on this chart, what is on this print right here that we can look at for order flow? Large orders, okay? This is how I combine my order flow with ICT concepts. What are the prices on these large orders? Let's see the biggest one here, 61.50, and then this guy up here, 62.25. Let's go back to this area. The low of the fair value gap is 58.50. The high of the fair value gap is 61.50. If we're just playing this fair value gap plus the order flow concepts, our entries end up being about here and here. Far, far better entries, right? Now, I was trading with a few people today, and I know that some people took this short. There's not an issue with it because your stop is supposed to be over this high. The problem is when we go down here and start driving back up, you start taking a lot of heat on the trade. Okay, a lot of heat on the trade. I sat out and I let this happen and I just left my orders in the market exactly where I wanted to sell this position. Came up, filled some, came up, filled more, rejected the 1 hour fair value gap as well as the larger orders as well as the fair value gap intraday. And we drove down, and where do we take profit? Like we said before, right into these overlapping, call them inverse fair value gaps, whatever you like, as well as this line right here, which represents the breakout of this range, okay? Now, if we look at this from ICT concepts or a conceptual model here, what is this pattern? Okay, if we start driving back up, what is this pattern? It's a breaker, right? This is another reason why we've got to look to take some off here if we're short. Okay, so that's the trade I took today. Now, I went through the charts and I looked at a few more examples actually, or a few more trade opportunities, and I want to look at them together here. So let's see if we have anything in this area. We've got this high right here, lower high, failing off the fair value gap, and we make another fair value gap. So around this time, 1045, 1050, do we have anything on our footprint charts indicating we should, could, or might be able to take a trade? Let's check it out. 10, 10, 50. So it's going to be this print right here. This is the print we drove up into. If I was going to take this trade short, I would be trying to short this. We didn't quite get there. I wouldn't have a trade in this case. It did go into the fair value gap, and it did work and pull back and get to a previous low. Okay, I just would not have that trade personally. Now, something that's very important about this day is if we look at this low that was made right here, inside of these two fair value gaps that are overlapping each other, okay, we're also sweeping some intraday liquidity here. We look at the bottom of this print on our footprint charts right here. The bottom of this print on our footprint charts, what do we have? Failed acceptance lower, buy-side imbalances. Buy-side imbalances, okay? Aggressive buyers hitting the market button at the offer while sellers fail to accept price lower. This does not have to be a trade that you just take when you see this. This could be an idea of a potential trade coming in the future. Okay? Take it as it is. Price drives to the upside. Let's move over here a little bit more. So now we're into sort of the lunchtime session. I never trade this session. I don't like trading this session, but we'll talk about it. We're here anyways. We go to the 5-minute chart. What do we have here? We've got some rando 5-minute fair value gap action, right? Small little one up here, little one right here. Price drives up. What does price do here? Have we swept anything? No. Have we popped into an order block here possibly off the manipulation move before the downside distribution? Possibly, okay? Price is rejecting there in the interim. What do we see on order flow in that area? What I see on order flow is I see a large order that was an iceberg that was sitting passively on the offer, absorbing aggressive buy orders. Not only were they absorbing aggressive buy orders, they were absorbing aggressive buy orders off this huge leg to the upside. At some point, buyers have to get exhausted. It's like they put their last bit of steam into this iceberg order to try and drive through him, try to drive through him again, fail to accept higher, price moves down. I prefer to see aggressive selling in this area so I can try and get a short back in here. We didn't get it. This iceberg, you could possibly short back into this guy. Why? Because if price gets above the iceberg and buyers are in fact extremely aggressive or as aggressive as they were coming into this guy, they should be buying above him and continuing a price drive to the upside. They don't. Where does price get rejected from? Wrong tool. Where does price get rejected from? Right at that iceberg that created a previous issue in the market. If you're looking at your candlestick charts, you won't see this. I'm not saying you have to look at these footprint or order flow charts, but if you're very comfortable with your ICT trading and your concepts, this is not going to hurt you. This is what made my trading better, is looking at these order flow and footprint charts. The day goes on, I can't find any shorts. There's no big sell orders after the moves to the downside. Maybe this guy, he's questionable. I'd rather see a bigger block like this. We drive down and we make lower prices. One thing I want you guys to notice is, we'll actually go to the 8-tick Renko. One thing I want you guys to notice is when price drives down, all of these big sell orders on the downside get tested. They hold, price moves lower. Large sellers here, what happens? Print moves back up, test them, we move lower. Little tests, move lower. When does the market start reversing in the other direction? It starts reversing in the other direction when buyers can start reclaiming these large sell orders. Failed acceptance lower. Buy-side imbalances. Buyers above price. Buyers accepting above price. And buyers moving price above price. Okay? This is how we know, or this is how I know, that price is trying to make a leg to the upside. Okay, we come back, we double bottom here. We're getting later into the day, 2 o'clock. We're kind of just fluttering around. I don't see any great trades. We've got a high here. We drive up. What do we do here? Fail to accept higher, sell side imbalances. Right away in my brain, there's something triggering. Buyers are failing to accept price higher and sellers are getting aggressive at the highs. Doesn't mean open short this thing. It means after we drive down, look to see where the sellers are. See if you have any ICT conceptual models that line up with these areas. And if they do, you have 2 really large confluences here to take a trade short at this area, which is probably 43, 70, 25, to get a leg to the downside. Okay? When do buyers take control after sellers continue to accept lower? When price fails to accept lower, you see imbalances on the bottom side of price, on the buy side, and then buyers start driving their price above aggressive sellers. Price starts accepting higher. Okay, now we're getting into the close. I don't even want to look at any of this. So look at these footprint charts. I want you guys to comment down below and let me know if you guys understand how these charts are supposed to work. I'm going to be doing a lot of videos on both these footprint charts and how to integrate them with these ICT models, because I think both ways of trading are fantastic, especially if you can put them together. And if you guys aren't understanding how these charts are to be read, you're going to be lost, and that's not going to be good. All right? As always, like, comment, subscribe. Leave your comments down below. I will get back to each and every single one of you guys. Until the next time, have a great day. Be safe on the charts. Cheers.